Uh, for the people that obviously have been in premium, and the people that attended the last crash course, you're going to hear a lot of the same things, a lot of the stuff that you see early on. You're already going to be very familiar with. The difference between what we're doing now versus the last crash course is we're spending more time on each detail. That way we can dedicate to learning it. Last time we sped through the entire crash course in literally like 7 or 8 days. It's going to be different this time. We're going to spend an hour a night on each individual topic. So the first week may be a little boring for some people. I've taken all the indicators off my chart. Tonight is the introduction to key levels. All we're going to do is focus on key levels. What I'm going to do is I'm going to do SPY, QQQ, and then I'll do one or two more. I'll let people throw out a stock, whatever they want to see, and we'll go from there. It shouldn't take but 30 45 minutes max, and then we'll go into answering questions. In my opinion, key levels are the most important thing to learn when you're trading stocks. If you enter a trade and you don't know how to identify key levels properly, you have no idea where that stock is going to go, and you will lose money because you're holding it thinking it's going to go higher or thinking it's going to go lower. A lot of people saw that with small caps that are now doing options. They didn't know where it was going, and they thought it was going to continue to go higher. Why? Because they didn't know how to identify the key levels. So tonight, in my opinion, is one of the most important nights. So be sure you're focusing on this. Essentially, when we're talking about key levels, what we're looking for is rejection points, reversals. For instance, you can see one here. There's multiple rejection points there. There's one here. You're not going to go and post a key level right here at the peak of this. Most people would, because that's where it reversed. Most people would post their key level right here, and that's not accurate. That's not the key level of this by any means whatsoever. What we're looking for are multiple areas of rejection, our intersection. And this key level right here, that's 40 or 429.96. So just say 430. All you have to do is move this key level down. Why is this key level stronger now? Because instead of having one area of rejection, we have three. This is a daily chart. So 3 days, it rejected at that same point. That's the key level versus the actual top where it actually pivoted and reversed. We're going to hold the questions off until the end. If anybody asks questions about something that's completely irrelevant, I'm not going to answer it. I want this to be smooth. People that are in the crash course last time saw how rough it got some nights. But we're going to focus on solely key levels. We're going to identify these on the daily chart, which is what we're on now. Then we're going to go down to the 1 hour, maybe the 30-minute, and then the 10-minute. And I'll talk about macro levels and micro levels. Macro is obviously the bigger time frames, and then the micro is going to be the smaller time frames. So right now we're going to go through, identify 10 or so key levels on the daily. And I'm going to explain each one. So right here, we have another key level to the top side. There's 2 levels of rejection right here on the daily. So we have another one. Down here on the bottom side, there's 3. What we're doing is we're looking for multiple candles on these reversals. Right here, here's another one. If you notice, I'm not going to the bottom like I said a minute ago. I'm going to where they all line up. This is right here, 3. And then down here we have this. There's obviously one candle right here. We're going to put it there. Why? Because there's 1, 2, 3, 4, 5, 6. That's going to be the key level there. Here's another one that's probably conflicting to some people. We have the bottom of this candle hitting here, the top of this wick hitting here, intersection, rejection, rejection on those. We're going to still do a few more. And now before I move on to showing everyone what it looks like on a smaller time frame, go ahead and ask questions before I move to a different time frame so I can show you what it looks like. Yes, I pay attention to gaps on the smaller time frames, and I'll get into that. It's a very good question. I do pay attention to the gaps, but I am a day trader and scalper. The only reason I'm using the daily chart right now is just simply show people how to set those levels. I'm not looking at the gaps right now on the daily chart because I'm not going to hold that trade. It may take multiple days to fill that gap. Basically, every day I get my levels on the 10-minute chart because I'm in and out of the trades very quickly. All right, so what we're going to do now is we're going to go down to the 30-minute chart and see how these levels lined up. We have, this level here, this, we have 1, 2, 3, 4, 5, 6, 7, 8, 9 levels. How set my kilos around pullbacks. Yes, we'll get into that on the smaller time frames. I just wanted to use the daily to show people how to find the key levels. And once I show them on the daily, it's going to be easier to understand on the smaller time frames. So we'll go to the 30-minute chart. If we zoom out, we can see obviously, there's some that bounced over, rejected, came back up, went through it, reversed. They're going to go through key levels sometimes. You're not going to get it on the penny. You start getting it on the penny when you're on the smaller time frames because it's an obvious move. But right here, this key level is still accurate. It broke above it and then it came right back down. Stayed in that same level here. Up here, you got a rejection, comes down, and you can see how they start rejecting at these daily key levels. Perfect. Another perfect one. Bounced over, it came right back down to it. Came up, bounced down, right there on it. And again, same thing over here. Hesitated here, came down, got close to that key level. And you can see it's trading on these key levels right here. It's not really separating too far from them. These are the key levels. Now what we want to do is we want to start finding these on like a 30-minute chart. And these are all just examples. These are not going to be completely accurate. I did not plan this ahead. So now what we're going to do is we're going to look at from the 10th over to today. We're going to set key levels using that. We're going to go down again. So obviously, we have one right here. There's two. So pretty hard rejection right there on a straight up trend. We have another one here. Came back, bounced in this channel right here. Broke above it. And then what I'm doing right now is I'm looking to the far left of the screen, but I'm following this line that you can see across the screen. I'm seeing where they reject most at. And that's how I'm getting these key levels. So if I put a key level here, we see it come up, it bounced there, came down, held here. Then we go way across here. See it bouncing and playing on this key level here. Held all the way across here, came down, rejected off of it under it. And you can see all the places that this key level is holding. So that's going to be another key level. I'm going to do the same thing. I'm going to follow this up until I find a more accurate level. So right here is another one. Why is this one? Rejection there, top side of this, candles held here, here. That red candle came down, rejected there. You had the wicks dip through, held all the way through here, right on the key level, came up, support, broke through support, came to this bottom key level, back up top, support again. When it gapped down right here, you have a gap. It held this key level. Same thing all the way through there. And then even if we zoom to the right, we see it again over here. Key levels always stay the same. Depending on how you trade is going to be the time frame that you're setting key levels on. Obviously, if you're a swing trader, you're not going to go and set key levels on the 1-minute chart. You're going to set them on the daily, the 4-hour, the 1-hour, or even the 30-minute like we're on right now. Yes, I look at after hours, everything. I look at all of that because, like, for instance, you see right here, the high of pre-market, it came down and held as support once it broke it. And, same thing over here. The low of pre-market right here, it came down and held right there again. Don't overcomplicate this, because in all honesty, setting key levels is the most simple aspect of trading. Where it gets complicated is people start seeing too many key levels. They're coming through here and they see a rejection here, they're putting one there, they're going to put one up here, here. And yes, these are all key levels, but they're not relevant key levels. Why? Because there's only one rejection point versus the entire screen that you're seeing. You have to find where all of them reject at. The more rejections you see on a level, the stronger it's going to be, whether it's support or resistance. So we're going to keep setting these, and I'll explain why each key level is the key level. Okay, here's another one. And you want to keep as few key levels on the screen as you possibly can. Why? Because if you set a, for instance, right here, you see from here to here, this is a $3 move. Your key levels are going to be your scale points. And when we go further into the class, you're going to see the patterns and the indicators that give you the entries. But your key levels are going to be your scale points. So for instance, you're going to miss money if you go and set a key level right here, because you're going to scale here and then you're going to scale up here again when it just had to be one scale. So you're making more money because you're holding more of your contracts or your shares. Right there is going to be another one. This key level right here. We have the top side over here. We have some support there, some resistance over here, more support over here. So this is obviously a strong level. If we scroll further this way, we see more support. Then it finally breaks support. And where does it go? It goes to the next key level and then bounces right back above it. Same thing right here. If we're just looking left on the screen, you can see kind of a head and shoulder pattern right here. You have a shoulder, a head, a shoulder, but we have the neckline down here. We have the shoulders right here. We have the high key level right here. So let's see how many days this was. 1, 2, 3, 4, 5, 6. On the 7th day, the entire day was based off of those two key levels, the entire day. You could have made 3 trades by just these 2 key levels. What do I mean by that? We have a key level here. Play it to the upside, reject, sell it, buy puts to the downside, close your puts, buy calls back to the upside. That's 3 trades right there based off of those 2 simple key levels. You can see the top side, when it finally did break pre-market, it held support, and then it broke up under it. And I remember this day. This is the day that we all got frustrated because we could not get a setup. That key level based from 7 days ago held so strong that for an entire day, it rejected. And what did we talk about last week? Whenever there are this many rejections, there's going to be a reversal. And look what happened. This thing gapped down from 402 all the way down to 400. And this is in pre-market. It set that up for the downtrend. And then from 400, it went all the way down here to 395. That is a $7 move based off of this key level. Now, based off the other key levels that we found, we would have had just one position, and we would have had 1, 2, 3 scale points that lasted the entire day. We could have stayed in that trade the entire day based off of the 30-minute key levels. Yes, DT, you're correct. We're on the 30-minute chart right now. We're going to keep slowing these time frames down, and we're going to go to setting the micro levels. But what we're doing right now is we're setting the macro levels. This is over a period of 10 or so days. So if you're a day trader, now it's getting to the key levels that we're going to look at. The 10-minute. This is what I use every single morning to set the key levels. Why? Because I don't care what the stock did a month or 2 months ago. Sometimes, when it's breaking highs or breaking lows, you have to zoom back that far to see where the next pivot point is going to be. But normally, as we've seen, the past few weeks, we're not getting much movement. But if we take that 30-minute chart and go down to the 10-minute, we can see how well these key levels played. Right here, pre-market broke below, gap down, came up, barely broke over it again. Once it broke back down, a candle never confirmed back over it. Pulled down, rejected off of that key level to the penny. Pulled back up, came down, pulled back up, and finally broke under. Pivoted at this key level, broke under, came back up, and now we're back here. As DT said, this area is going to be a strong key level. Why? Why is this level going to be a strong key level? On the 10-minute chart, just in the last few hours or few minutes of market close today, and then after hours, we had 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18, 19, 20, 21, 22, 23, 24, 25, 26. And then the top side, 27, 28, 29. That's 290 minutes of rejection on the same level. That's going to be a very strong level tomorrow. So if we gap up and we come back down, or if we gap down and come back up, it's going to hesitate at this level. And that's the micro. You want to set these key levels, or as I do on the 10-minute chart. But then I may watch that 1-minute chart, and then I can go to setting more key levels. Just like this 1-minute chart. If we go to the 1-minute chart, like right here today, this is just one example. We had this big candle come down. It gapped all the way down to here. We could set the key level at the bottom of that. Obviously, that's a strong level because there's a huge candle there. Bounce right off. You can set another one right here because there's two forms of intersection. There's a rejection and an intersection right there. Then we have rejection, rejection, rejection. So these two levels right here are going to be very strong. And what do we see when that finally breaks below that level? It broke below here, popped back up, rejected off of this level on the 1-minute chart. And then when it finally broke down, this is what happened. I don't have the indicators and stuff on the screen here, but I actually squeezed two different 100% plays today on puts. It was up here in this area, and then it was right here. Simply looking at the key levels and certain patterns. That was it. But you can go from the 10-minute to the 1-minute, and this is going to help you become a better day trader because you're seeing these micro levels. You're going to know where that stock may bounce to on a 1-minute candle and reverse that, and that could set you up for an entry. It may reject off a key level and come make a double bottom. We know if it breaks below and confirms, we can get puts. If it bounces off the double bottom and confirms, we can get calls. Does everybody have a good understanding here on SPY? If so, we're going to go to another chart here, and we'll do it again. Okay. And I know a lot of you are probably watching this and you're like, this is boring. This is the most important part. You have to learn this. Tomorrow is when it's going to get interesting because I'm going to show you how to play this, play these levels. But you have to know how to set these levels to play them. If you're setting the wrong key levels, you're going to completely screw yourself on your entries and your scale points and your exits. And we're not going to talk about that until tomorrow. We're solely focusing on setting those key levels today. So now we'll go to QQQ. And just by looking at this chart overall, I can already tell, I've been doing it for so long, I know where I'm going to set these at. We'll start over here on this side of the chart, since it's kind of in this range here. We're going to start over here, and then we're going to move from there, move up. We'll go all the way up setting those key levels. So right here on the daily chart, we have this key level. If we zoom in, we have the bodies, multiple forms there, or we could zoom up to this one. Now what we want to do between these two, because they're so close together, is figure out which one has the most areas of rejection. So right here on this key level, we have 1, right here, 2, 3, 4, 5, 6, 7. 8, 9, 10. Over here, it's kind of close, so we'll say 11, 12. So we'll use those versus using this one down here. We have one, and then they're just trading sideways on that. Don't get me wrong, both of these are key levels, but this is going to be the stronger key level right here. Right there, perfect. You see all across the board right here, double top, right here, double bottom, same thing over here. They're going through these, but we catch it over here as well. So that's going to be the key level there. Always look to your left and to your right when you're setting the key levels to see where they intersect or reject more often. So next, we're going to do this right here. I'm looking left. I see one right there. I'm looking right and I see several. So that's going to be the key level. You have this area here, 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 here again, and then all the way over here. Now we're going to keep moving up. You can even set the levels in between here if you want to. You could do that one as well. Here, here, through here, then over here again. May need to move this one down just a tiny bit right there. But this is literally kindergarten work. And once everyone realizes, you know, I'm probably overcomplicating this, that's when trading gets very easy. Just master these, rewatch this video, practice, and then keep reviewing the charts. Go to the daily, then go to the hourly, 30-minute, 10-minute, and just keep doing it. And eventually it's going to get to where, as people see while I'm trading live, it's pretty close to the penny every time it rejects. So there's going to be another one. We have it here, here, broke through, support, 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 resistance, support, support, and the same thing over there. And then we'll just keep on going. There's going to be another one. 1, 2, 3, 4, 5, 6, and then 7 in this area. There's multiple candles on each one of those. So if we're going to zoom right and see what happened with these key levels. Now look how perfect that is. We did this without even seeing this side of the chart. But if you look at the daily chart, how well you could have played every single one of these levels. Look how it bounced in that channel. Look how it bounced in this one. Same thing here. Came down both of these two levels. Bounced in this one. Here, here, broke over. It came back down, bounced again. You can see how they're rejecting on these, and we didn't even see this side of the chart. It's almost like predicting the future. You know where it's going to hesitate and reject at. While I'm going right now, does anybody have any questions? I know we're doing simple stock stuff right now, so you can ask questions as we're going. I'm just trying to put it in your head how to set accurate key levels. And the next thing that we talk about is something we talked about in the crash course that you never hear anyone else talking about when it comes to key levels. Give everybody a few seconds to ask questions if you got them. I just trade stocks, but I know someone that made a little over $500,000 using my trading strategy in crypto. Anything with candlesticks, you can use my strategy for. I was a small cap trader. Only been trading options for maybe a little over 6 months. Small caps is where I've built my wealth. But the strategy that I teach, you can use it for any type of trading that you want to. But no, I personally do not. I'm clicking the key level and pressing backspace. I've traded crypto before. Whenever I first came up with the strategy that I use, I got into it and I traded SafeMoon. I put like $270 into it and made like 17,800 off of it. But that wasn't using anything. That was just a pumper. So no, I haven't. I've traded Dogecoin a few times when it was under 10 cents using my strategy, but when people started pumping it, I got away from it. For small accounts to practice scaling is TQQQ good to use. I wouldn't even worry about scaling your profits until you're buying more than 4 contracts. If you're buying 2 contracts and you sell one, it could reverse and then you break even or even lose money. If you buy 4 contracts and you sell 3 and then hold one, if it goes back to where it was, you're not going to lose money because you took profit with 3 and only held one. How many levels are we looking for when we set them? You give us one for calls, one for puts. How do we know when we have identified enough? When the market is getting ready to open, like I said earlier, I'm a day trader. I'm only looking for 4 key levels. I'm looking for a call side, the key level to get in calls, and the next key level after that where I know to scale. Same thing with the put side. I'm setting 2 on the put level, 1 for entry, 1 for scale. And as I see it moving in whichever direction it goes, I'm going to start making more key levels as the day goes. If you go and set 20 key levels for the upside and 20 key levels for the downside, you're going to be wasting your time because we don't know which direction the market's going to go. I'm on Webull. I think you DM'd me earlier and I told you I'll use Webull. We're going to get into options and explain the concept. Yes, I'm going to get into options. Right now we're keeping it simple. So we're only asking questions about key levels tonight. It's a sage advice. With 4 contracts, scale 3, keep 1 runner, 2 contracts, sell all. Oh yeah, absolutely. You have no reason to be scaling your position with a small account. If you have a $500 account, in my personal opinion, you should only be putting 20 to 25% into the trade. If you put 50% into your trade, that gives you 2 chances to trade. A lot of days you may get 2 wrong trades and then you have no more buying power and you close the day red. But if you have $500 and you buy 2 contracts that cost 50 cents, so $50, you're giving yourself multiple chances if that trade does go wrong. When you get in the profit zone, you need to take profit. On a $500 account, if you make $100, that's pretty damn good. That's a big percentage of your portfolio that you're making. But people don't realize is they have $500 and they want to make thousands of dollars a day, and that's not realistic. 5% a day is all you need. If you have $1,000 account and you make 5% per day, you'll be a multimillionaire in less than a year. Everybody wants to get rich quick, but nobody wants to learn how to actually do this. And that's what I'm here to do, is teach. I didn't make $1 million overnight. I made $1 million when I started compounding, and my goal was 5% a day. And it happened very, very quickly. But I was being very smart about it. If I was up on the day, I'd walk away. Base hits, like you just said, they add up very quickly. 5% on your $1,000 account is not going to seem like much. When you build that account to $10,000, 5% is going to be a lot. 100,000, 5%. You're making the same trades no matter your account size. The only difference is you have more money to play with. How do you avoid fake outs when it comes to key levels? Essentially, we'll get into that when we talk about volume. But what I look for when I come into a key level is based on volume, I preload going into that key level. It's very rare that I get faked out. Why? Because I'm already in that trade. For instance, right here, based off this key level, I see it break below this one, or I see a big engulfing candle. So I may preload going into this double bottom here based off of volume spike. I enter that trade. I scale my position where most people would enter. If it reverses off of that trade is still green versus it going red because it reversed off this level. So I preload when it breaks this double bottom, this engulfing candle. I'm already in that trade. Once it breaks through, I can continue taking profit at each next key level versus buying it when it breaks the key level. That's what key levels are for. We know where it's going. So if it sets up off this key level, why not preload it going into this one? Depending on the size of the stock, yes, absolutely. Like for instance, big key levels on SPY are going to be 400, 395, 390, 385. But we have to have those levels on the inside. Just like today, when we saw SPY dropping, it took forever to break 396. I think I even told someone 396 is going to be the next level. Although there is not, a key level there, that's a mental level, and most people are going to be wanting to take profits or enter that trade at that level. So So you have to see those as well. When I think there's going to be a strong mental level, I'm going to be scaling my position going into that. I also never wait for it to hit a key level to scale my position. Let me try to find an example of what exactly I'm talking about. Just say there's a key level right here. This is just an example, but say there's a key level right here. I'm in puts right here. I see it breaking down and starting to hesitate. I'm going to go ahead and start scaling that position, although it's not at that key level yet. A lot of times the stock is going to reverse before it gets to that actual key level. It's going to be very rare unless you're on the 1 minute or 5 minute chart, something like that, that it actually hits that exact number. You have to be getting rid of your position going into a key level. Why? Because other people see that key level and they think it's going the opposite direction that you do. Most of the time they're going to be right. So I'm getting rid of those. I'm dumping my contracts on the people that are thinking the exact opposite of what I'm thinking. So I'm going ahead and getting rid of those. DT, yes. Sometimes you do have to use the hourly or daily because we're breaking highs and lows. And that's the only way. But what I look for on the hourly or daily chart when we're in that situation is I look for the closest key level, whether it's 50 cents away or $1 away. I'm gonna start making them that way. It is frustrating because we have to zoom back so far and it takes time, but we have to be prepared for that before we even enter the trade. We're gonna go down to the 30-minute here. And now what I was saying is if you look at the daily chart that we were just on, you see how these key levels look here. This is from 1110. There's 2 key levels right here. When we go to that 30-minute chart, when we go back to 1110 over here, look how many more key levels are inside of this. This is where we get to the micro area talking about key levels. These are the macro levels. But based off of all of this right here, I'm going to box this out. Just say this area here. We're going to forget about this area and we're going to see these levels over here. So what we're going to do is we're going to go in and we're going to start setting the micro levels. So right here, obviously, is going to be a key level. We look at this level right here and we see hard rejection, then it gapped up. So we're going to go up, we're going to look left, right, every which direction. We're going to see where they start lining up. And as I said, it does not have to be to the penny. We're getting rid of these shares or we're entering before it ever gets there. It does not have to be to the penny. We just have to know the general range of it. Now, just based off of this, I didn't set many, but if we just get rid of this box here now, and we look at those key levels that I just set without regarding any of this, you can see what happened. We hesitate at the key levels that we set, trade on them, break above them, come back down here, come down, find support, gap all the way down. Then another key level becomes resistance versus support. Same thing up through here, double bottom, puts, comes down. That's really all it is to setting key levels, but you have to know how to set the macro key levels before you can focus on setting the micro. So what I would recommend everyone doing is practicing this on the daily chart and then dumbing those time frames down, because those other ones that we set on the 30-minute, they're still relevant and they're going to be very, very strong. So if you want to set key levels on the 30-minute chart and make them a different color, click your Weeble, go right here, make them red, make the different time frames a different color so you know which key levels are which. And then you can go down to the 1 minute. And, looking at the 1 minute chart, we have plenty more key levels inside of this. So we have to be setting them on multiple time frames. Intraday, I'm going to use the smaller time frames to make the new key levels because I want to know where it's going to go in the next 10, 20, 30 minutes. I don't care where it's going to go tomorrow. I'm trying to make 100% on this trade in the next 5 minutes. I'm not trying to make 100% on this trade in the next 2 weeks. I want to know where it's about to go. So we have to start using those smaller time frames intraday if we're day traders. And another thing, what I was talking about earlier, this is something you've never heard anyone talk about. I talked about in the crash course. Depending on the direction that the stock is moving is going to tell you where you need to set the key level. And what I mean by that is, let me delete this. Okay, we see the stock moving down here. So when we go to set a key level, we're not going to set it on the top of candlesticks. And a lot of you are probably like, what the hell? That makes no sense. It actually does make sense. When this stock was going down, where did this stock hesitate? Here. So we see it hesitated here. On the downside, we see a round top form. So we start looking for key levels on the bottom of previous candlesticks. So over here, so if we bought in, just say a key level was right here. I'm just throwing this out there, but just say we bought on this round top, it broke below this double bottom here. We would know to scale right here because the stock's probably going to hesitate. And it did here with one candle, but still that's giving us time to take profits. It doesn't matter, you know, if it moves $1, $2, whatever it is. Our goal as traders is to take profits. It's not to gamble and bet it's going to break that. I'm pessimistic about this level. I'm looking at this and I'm saying this damn thing is going to reverse off of this. So I'm going to scale my position and take profits. When it breaks through, after we have already scaled some of our position, we can ride it down to the next key level. So we're going down here. So we're going to look left and see where that next key level is going to be. So the next key level is right here. So what am I going to do? I'm going to ride this after I've already scaled it down to the next key level on the downside. 284.44 because that's the top side. You talking about right here? Okay, you see 1, 2 candles right here. How many do you see right here? Yes, Lucas and M. Scott, you're correct. There is a key level there. Which one's stronger? You have 2 points here, and you have 1, 2, 3, 4, 5, 6, 7 points here. What number's higher, 7 or 2? Simple stuff like that. And that right there tells me that you're probably setting too many key levels, just because you would right here. Now, for instance, say you bought 6 contracts. You entered over here. You scaled 3 of them here. You only have 3 contracts left, so you're going to have to sell your full position here. You get rid of that key level and go to the stronger one. It breaks below this round top that we bought earlier. You can sell 2, 3 here, and then you ride 3 more contracts all the way down to here. Yes, this is a 1-minute chart. It's probably not that many cents, but you can see how much stronger this level is. If you look right, look what happened on this key level. Yes, bottom for downtrend, top for uptrends. You can literally look the same way. Let's go over here and see what happened on these. Trying to find something that's in the same area. I don't know how far we have to go back for this on the damn 1-minute chart though. Probably a long ways. All right. That's not going to work either. Trying to find a good example so I can explain this better. All right, we'll do it right here. We'll just move this, say right here. And then we'll put another one right here. And then we'll just throw another one right here. I'm just doing this as an example. Nobody freak out. This isn't actual key levels. I'm doing this as a good example. If a stock is going down, you're going to look for the down area for the key level because it's going down. It's not going to hesitate on the top side. It's going to hesitate on the downside. If it's going up, you want to find the top side of those candles to set the key level there. And what I mean by that is if you look right here, we see this stock moving up. There's a key level here to the upside. There's a key level here to the upside. So what is this going to do? When we see a reversal start to happen, say this area, say we buy calls, it's going to give us scale points in each level. Say we enter a trade right here based off of a triple bottom. All right, we see 1, 2, 3. See a triple bottom, breaks below, comes back up. So we want to buy this to the next key level. What are we going to do? We're going to look for the top side over here. See, this is the bottom side right here. Now, if we look over here, we would have scaled this position early. So we can get rid of that one if we're looking at just the top candles. Out of this triple bottom, we come up, break back below. We get a volume spike down here, as you can see. We enter that trade. We scale it going into this key level. It comes back down on that same key level. We could enter that trade again, scale it once, scale it twice. Depending on the direction of the stock, whatever direction it's going is going to be where you set those key levels. Again, I'll say it one more time. The stock is going down, find the nearest key level on the bottom of candles. Stock is going up, find the nearest key level on the top of candles. That is something that I'm pretty sure that I'm the only person that does that. And I think that's why I get it right to the penny a lot of times is because no one else does that. They're setting key levels all through there on the top and bottom. Absolutely. And it's smart when you think about it. You know, it's one of those things that I've been doing it for so long, you know, I'm like, why does no one else do this? It's common sense, you know. I mean, if you drop a basketball, it's going to hit the floor. If you throw a basketball up and at the bottom of the rim, it's going to hit it's going to hit the bottom of the rim and it's going to come right back down to the ground. It just makes sense to me. Your feet are on top of the ground. You drop the basketball, it's going to bounce off the ground under your feet. If the candle starts dropping, it's going to drop to the bottom side of the candle. It's not going to drop to the top side. I guess a better way to put it would be if you throw a basketball in the air, when it comes down, is it going to hit the top of the rim or the bottom of the rim? Ball's going up. When it comes down, it's going to find support on top of the rim. It's not going to magically just fall through the rim and then reject off the bottom of it. Yes, and it's to the point now where sometimes I forget to even mention what I'm doing because I've been doing it for so long. Like I can set every key level on this chart in literally less than 5 seconds, just because I see it that quick. I mean, top side, bottom side, and I'm skimming through that quick. There's another bottom one right there. I'm skimming through that quick, and I'm looking across the entire screen all in one motion. Another one right there. What do we see? And you know why it's taking you longer? Obviously, I've had more screen time, but I'm not second guessing myself while I'm doing this. The more you do this and the longer you day trade, the faster you're going to get at setting these key levels. And you're going to need to be very quick doing it because intraday, when you're on the small time frames, you're going to have to be able to set that next key level fast. Yes, I do the intraday key levels. I do a small line. And what I mean by that, what DT is talking about, is a lot of times when you're watching me trade live, which everyone in the class will get to do tomorrow, and you'll see me setting these key levels. For instance, say I'm just looking at this level right here. I'm going to do this right here. I'm going to draw here. This is going to be the key level. That keeps me from having to zoom really far back out. I don't care what this chart did a month ago. I care what it's recently done in today's market. So reject here, trade on this, came back up, rejected. It broke over this line and came back down. So I'd be looking for a short position. It broke over, found support, then finally broke under that. This would be the key level that I was looking at to buy puts. Now, if I stretch this out even further, what do we see? We see it break below that, bounce off this next level, reject off of that small key level I've set, and continue down. And all that does is it just keeps me from having to zoom really far back out. I know when I draw small lines, that's where I'm looking for a trade. I'm looking for a trade in that area. Yeah, absolutely. I was gonna request a stock from everybody and go from there. Would you wait to enter in hops that broke? The entry is hard to really talk about with just key levels. We're going to get further into that when we start talking about indicators and patterns. I'm not going to look at this and enter it just because I see something here. There's going to be other forms of confirmation, and it's going to make it an A+ trade. If the pattern lines up and the EMAs line up and the key levels line up, that's triple confirmation. And yes, I've been doing this for so long, I don't need all this. I could trade just like this. It's the same thing with trend lines. A lot of people draw their trend lines. And this isn't, again, not going to be a perfect example, but just say this is a key level here on this trend line. What most people are looking at here they're looking at this line. They're looking to buy directly under this line, whatever it is. But what I'm seeing on this, and actually Steve and I were texting about this earlier, most people see this and they're going to wait to enter this trade way down here. I'm looking for multiple forms of confirmation. I see this trend line here, but I also see a double bottom. Any downtrend that you see, you're going to have more entries on double bottoms or uptrend, same thing. You're going to have more entries on double bottoms or double tops going into this key level. If we would have shorted this stock when it broke below this double bottom here, yes, we would have stayed on this key level, but it never broke back over that key level. So I'm in this trade right here. Most people are in this trade right here. I'm not going to close this position until it breaks a key level to the top side. So in turn, I'm making a lot more money. Why? Because I am using this trend line, but I'm also using the double bottom pattern right here that's been broken. It's not in hopes that it's going to break that. When you become good at technical analysis and all the indicators line up, you start to know what's gonna happen actually. Like to me, I'm very confident. Okay, this is gonna break. Why? Because it's below all these levels. If it comes back up, I'm gonna have a stop loss right here in this area. And never once came back to that area. So I understand that it came down and it did not bounce back up and retest that. So we're set up for a downtrend here. The double bottom's right here. Here's rejection at this point. It didn't form a double bottom. It was going into a double bottom. So I know if it doesn't bounce off of this, it's going to continue that downtrend. A new low has been made. It's making lower lows. So here is the low. The low has been broken. Yes, and the volume is a huge factor. For instance, just looking at this double bottom right here, what do we see down here? We see volume spikes to the red side going into that. And that's another thing we're going to cover later. What I'm going to do now, we've been on here for almost an hour. So what I'm going to do now is I'm going to go to Tesla. And I want everybody on their computers to pull up Tesla and go to the daily chart. And what we're going to do is we're going to set, I'm going to say, let me, up here, 1, 2, 3, 4, 5. We're going to set 5 key levels. I want everyone to tell me which 3 are the strongest. I'm going to number them from the top to the bottom. So 1, 2, 3, 4, 5. I'm going to set 3 strong key levels and 3 small key levels. I want everyone to tell me based off of August over here to today. And just everyone make sure your charts look just like mine. Then we'll go from there. All right, top is 1, 2, 3, 4, 5. We're choosing three key levels out of this one. All right. Maniac Trades actually got them in order. These are all good, strong key levels. The least relevant one is going to be number 1 up here. But if we look left, number 2 over here, we have 1, 2, 3, 4, 5, 6, then 7, and then it went to the middle of these. And you can see through here, we start getting more and more on the way down. Why? Because we have started having choppy days that are rejecting off of these levels. But 1 is the least relevant up here because there's only 1, 2, 3 actual forms of rejection up here. You have here, here, and here. Yeah, and that's the thing. I didn't count any of these. I didn't count them while I was doing it. I was just looking as I was setting them to see where I see the most rejections at. It's that simple. Just look quickly. Look quickly. I mean, all of these were good key levels. This is a key level. You know, you can find all of them through here. All of these little micro levels are going to form a rejection later at some point. So we can pull all of these down. And eventually, if we zoom over here, we're going to see where they start rejecting. And if we look at what I just did, looking at the other side of the chart, what do we have in here? Every one of these is reject on one of those key levels. But it's just stop over analyzing. Get key levels are the easiest part of it. You just want to find the most rejection points. So tomorrow, what I'll do is I'm going to go live about 30 minutes early. I'm going to go through, I'm going to set the key levels and explain them to everyone as I'm doing it. Like I said, today is going to be more so of a boring day. It's key levels. Who cares about that? Tomorrow, we're actually going to see it put into work and in real time. So be sure you're on live tomorrow, and we'll go over it all as it's actually happening, and then it'll start making more sense. And then tomorrow night is when the key levels really start to make sense. So if anybody's got any questions, throw them out there. And then if not, we'll go ahead and close this out. I'll take a few questions. We've been on for about an hour now. Absolutely, Big Will, no problem. Just don't overcomplicate this, everybody. Key levels are simple. Don't overcomplicate it. Yeah, I'll record it. Obviously, you know, I'm not going to be trading or anything. I'm going to be teaching, but I'll record it and get that posted somewhere. But this class definitely went a lot smoother than the first day of the crash course. I appreciate everyone not, you know, jumping the gun on questions and things like that. Everyone had good questions. So let's keep it going like this tomorrow. And in 2 weeks, hopefully we're all a little bit better at trading and can become more consistent. They're in the education channel. I'll post a link for the books also. I don't know what Knox is doing, honestly. But I hope everyone has a good night, and be sure you're on in the morning when we go to setting the key levels. That way you understand where I got the key levels and we see how to trade them intraday. Dustbuster, I went to options because I'm making a lot more money with them. You can make a lot more money. It's hard to make 100% on a small cap trade, and I almost make 100% on every trade I take now with options. So, and it takes less money as well. But everything I'm teaching, it's focusing on any type of trading that you want to do. And I agree. I think these more in-depth classes, instead of speeding through, we're taking time to focus on one topic. I think that's going to actually help everyone. And by the end of this, hopefully no one's second guessing themselves, and we can all do this together as a team. Chain is only as strong as its weakest link, and we don't want a weak link in the Discord. So the better you guys are, the more things you're going to catch that I don't. We can all work together as a team, and that's more money in our pockets. So I will see everyone in the morning. And I hope everyone has a good night.